Oh hey, I'm just doing a little prospecting. That's because gold prices could go up to $8,000 an ounce in the next 5 years, according to a prediction made by Deutsche Bank. And that's all because of a new trend taking place in central banks right now. No, suits with shorts aren't making a comeback, unfortunately. Central banks, particularly ones in emerging markets, are shedding US dollars and buying up gold. It's quite the reversal in what central banks have been doing over the past several decades. Just look at this. The share of US dollars in global central bank reserves has dropped from its peak 60% down to 40%. Meanwhile, the share of gold in global central bank reserves has doubled in just 4 years and now accounts for 30% of all holdings. On the surface, that might seem pretty reasonable, especially since gold is considered a safe haven asset, meaning that it's likely to hold its value during market turbulence, whether that's driven by economic downturn or geopolitical instability, for example. But lately, gold hasn't seemed particularly stable. Gold suffered its worst 2-month decline ever recently, right on the heels of its best performance ever, hitting a record price of $5,000 an ounce. And yeah, gold prices are still around 40% higher than they were a year ago, but the fact that they dropped around 10% during the war in Iran means that they're not as impervious to instability as investors might like to believe. And anyway, the US dollar has seemed like a safer bet for decades. During the 1990s, central banks actually began selling off their gold reserves and buying US dollars. Inflation was low, and central banks could make more return on US bonds than with gold, which doesn't offer interest. And by then, the US had positioned itself as a leader and influential force, not just militarily, but economically and geopolitically too. Fast forward to today, that hegemonic dominance is a little shaky. Under the administration of President Trump, the US has engaged in trade wars, weaponized sanctions, and driven a 10% depreciation of the greenback since Trump's second term. Some countries just aren't sure that the US dollar is the safest place to hedge their bets right now, driving many central banks in emerging markets, particularly those with alliances outside the West, to look for an asset they see as more stable and that has stood the test of time, like gold. And that demand, says Deutsche Bank, will drive up prices to record high levels. And my motivation? To strike gold.